Hi traders, welcome to my first episode of Smart Money series. In this video, we are going to discuss about how Smart Money played their game today and how they are positioning for the upcoming sessions. So before getting into the video, I want to clarify that I am not a SEBI registered person and all the analysis I done here is only for education purpose. So before taking any trades, kindly consult your financial advisor, and I am not responsible for your profit or losses. So let's get into the video. So today morning price opened a gap down, like 20-30 points gap down, but right after the gap down it was get into the previous day's range. That is a first bullish sign we witnessed today. And also yesterday evening this 2 p.m. candle swept the 15 minutes liquidity. Actually the 15 minutes liquidity was present at 24,650. So price was ready to take off yesterday itself. This 2 p.m. candle itself given the confirmation. Actually in 15 minutes candle, this 2 to 215 candle itself given a confirmation for a small kind of pullback move by yesterday itself. But it doesn't happen yesterday. That's why after the gap out, the price could not sustain in the lower range, and immediately it get into the previous day's range. But after getting into the range, we can't see any movement. The price started to consolidate because there will be no any fair value gaps. So if you don't know what is fair value gap, it is a gap present between three candles. So in three candles, if you find any gaps like this, so here you can see there is a perfect gap. So here also you can see there is a perfect gap. So like this, you can see too many fair value gaps present in 5 minutes time frame. So these all gaps indicates that Smart Money has deployed their capital to move a market in a particular direction. So maybe it may be in uptrend, also in a downtrend. So in today's price action, it happened in the uptrend. So once price formed fair value gap, and when price touched this fair value gap and reversed with a good rejection candlestick pattern, the price has trended significantly to 24,830 levels. But this is just a retracement, guys, because for the past 3 days continuously price has fallen nearly 2.3%. So the market, whenever the market trends, it will like this. This is the 2-step downside move and 1-step upside move. Again 2-step downside move, 1-step upside move. This is how normal price action works. But if you go to 1 hour time frame, this trend is not 2-step and 1-step process. Instead, there is a huge fall. This is a 4-step down, and now it is just a retracement. It is maybe 1.5% up. So there still there will be some remaining price action, bullish price action is left, and the important resistance now for the price to reverse is present at 24,889. This is the 15 minutes liquidity. So before taking this liquidity, the price can go up or even go down. If in case price go down also, there are lot of unmitigated fair value gaps present in the downside. It may get reversed in any of these fair value gaps. We can't definitely say it can reverse from this level, but as per the Fibonacci, the sharp impulsive move started from here and it went up to here. So the below 0.5%, there are 3 fair value gaps. These are the high probable reversal zones if in case price reversed before taking this liquidity. But if price taken this liquidity by touching and making a liquidity sweep once again, and if it reverses, we cannot ensure that it will reverse from this fair value gap, and we can expect a good fall. And once it crosses this level, today's low 24,600, we can expect a further more selling pressure, and it may even touch the weekly time frames liquidity, drawn liquidity. So that is happened around 24,000, precisely 24,872 range. So this is weekly DOL. DOL means drawn liquidity. So drawn liquidity means once price started to go down or go up, it should reverse from a particular point. So for a particular time frame, it will be different points. For example, in daily time frame, the drawn liquidity was present at the same place, somewhat down. It is present at 24,464 range. For weekly time frame, this red candlestick is a drawn liquidity. It is present at 473. For 1 hour time frame, the drawn liquidity was present here 24,500. So for different time frames there will be different drawn liquidities. So based on your entry time frame, the drawn liquidity will vary, but weekly time frame holds a highest significance to reverse the price. So as of now, price should touch these drawn liquidity levels 24,474 to further move up or down. So mostly I am expecting a reversal from here, a bullish reversal. If in case price failed to reverse from this level, we may expect a further fall towards 23,938 levels, or maybe it can reverse from 24,000 also. So as of now, price action is bearish and smart money is also bearish. Today's 150, I think it is 140 points. 140 points rise is just a retracement for past 3 days fall. So anytime it may reverse. So in 1 hour time frame, the reversal zones may be this fair value gaps, because these all are also unmitigated fair value gap. So it may reverse from this level or this level or this level. So we cannot say it should definitely reverse from this level. There is high possible that it may reverse from any of these fair value gaps. Since 0.5% level is present in the first fair value gap itself, and also it broke an important liquidity level which already present, which is around 24,889. So there may be a higher or 90% chance for the price to reverse from this fair value gap itself. The range will be 24,900 to 25,045. This fair value gap holds the higher probability of reversing the price. If it reverses from here, from this fair value gap, so it may touch this 24,472 levels. This is the positional price action. And intraday wise also, maybe we may say it in the tomorrow's morning video. So for the next day's price action, for tomorrow's price action, since price swept the liquidity, it is bullish only. It may move higher and it may reverse from this fair value gap. So until price breaks today's low, which is 24,600, in intraday also we cannot be bearish. If it reverses from this 15 minutes fair value gap, so either 89 levels or this fair value gap, we can be bearish. So this is the range. So we should not be bearish in this range. This is the range. We should not be bearish, either bullish. This is the no trading zone. If price reverses from here, we can take bearish trades. And also if price break these levels, this 600 levels, there is a potential for the price to move towards this 473 levels. So here we can also take the bearish trades. But this range is a consolidation range. This 24,890 to 24,600 range is a consolidation range. So if you try to trade this range, the price action will behave choppy and there are higher chances of hitting your stop losses. So trade cautiously within this range. So as of now, I think I clarified everything about the smart monies, intradays and positional game. Hopefully this video gives some insights about smart money and its price action. So if you like this video, kindly subscribe to this channel and also like this video. And if you have any comments, kindly put it in the comment box. I will try to clarify it, and also maybe I will come up with a lot of videos regarding the smart money. And thank you for watching. Thank you.